Good morning, everyone. Today's the 30th of December. It is Monday. This is Brad Matheny. What a wild day. I mean, this is really low liquidity rotation. And I think it's very important for you guys to understand that, the markets are really ripping. I mean, these moves, 1.5, almost 2% rotations. This is the type of thing that happens during a flash crash type of event, like you see right here. This is perfect flash crash. And if you remember way back over here, let me get rid of that. Okay, right here. Long time ago, way back over here. This is 2 hour. Go back to 4 hour. Long time ago, I suggested getting to 80 to 85% cash. That was back in late October, roughly October 28th, 29th, getting to 80 to 85% cash. I warned you very clearly over 2 months ago to expect extreme volatility, and I didn't expect the markets to be doing much of anything over the next 2.5 months. I expected the markets to be rather flat and rather volatile. As you can see, we've had the post-election rally. Yeah, I mean, it's been crazy. For all of those that, bought in and traded through this, you can still make money, but I guarantee you most of those people got trapped right here and or right over here and gave back every penny they made, thinking they couldn't be wrong. And what I'm trying to tell you now is that we're looking at, if you follow my research, we're looking at a very extended sideways move, I believe, in the markets over the next 6 months. I believe we're going to go all the way out here past April, moving into a sideways pennant formation and expanding wedge. And I believe it's going to become even more dangerous for traders going forward, which is, again, why I'm trying to talk to you guys about this, the Gunslinger tools. So when you come over to Mint.com, and I'll have to move this a little bit so you can see, and you see what's going on at Mint.com, one of the most important things you can do for yourself right now is take advantage of this 6-month Christmas deal for $99.99. It gives you a heck of a deal, and you can follow me and use all my tools. But secondarily, the most important thing here is the Gunslinger tools. And basically, I call these the Gunslinger tools because they allow you to stay agile, to adapt to trend, to learn to make your own decisions, to prepare for market moves. It's a whole suite of tools built around a proprietary pressure indicator. So if you understand pressure, think of it as the force that moves the ball. And the way I'm going to explain that to you is, in a pool, this is the way I explain it to everybody. In a pool, if you toss a soccer ball into a pool, it's going to float, right? That's no pressure. It's going to stay at the water level, slightly submerged, but mostly on top of it. And it's going to sit there and just float. Why? Because there's no pressure. If I want to push it down, I have to get in the pool and I have to put pressure on it to push it down under the water level. If I want to hold it up above the water level, I got to get in the pool, get my hand under it, and I got to lift it up and put pressure underneath to push it up above the water level. So when you get into that mindset of what the Gunslinger tools are, these are a bunch of examples which we're going to go through over here. The Gunslinger tools are a suite of tools that are included. You basically get all of these: the day trading pressure system, the Bollinger Band system, the adaptive pressure exhaustion system, the pressure wave indicator, pressure cycles, and pressure Donchian cycles. And so now let's go over and take a look at these. They're included with the expert growth product. So again, if you come over here and take advantage of this Christmas special, you'll be able to see my research. You'll be able to see all of my proprietary updates, a lot of my cycle data, and you'll get access to the Gunslinger tools as well. Now remember, today we had and where is it? It's going to be right here. Nope, it's not here. It is going to be not here, not here. Okay, I'm going to have to go get it. I can probably show it to you here. Today, yeah, this is it. We had a gap reversal pattern setting up today. So understand that today's pattern is indicating bearish explosive accumulation, and we are looking at a gap reversal today. Now, I've had a lot of comments from members and non-members about, hey, how do we catch this downtrend? How do we know what's going on? Well, it comes right down to using your own skills and the tools that I give you, which are the Gunslinger tools. Now, I'm going to move this back over. And what we're going to do is we're going to play with the Gunslinger tools a little bit. Okay? First thing I'm going to do is come in here and I'm going to add the Bollinger Band system. So the Bollinger Band system comes in. This is hourly. Let's go back down here to 5 minute. And what I want you to see is how cleanly the Bollinger Band system rolls through price trend. Now you can adapt this as well. This is the default setting. So if I come in here into the settings, you can see here we have the short-term balance, which is part of the pressure system, and the long-term balance, and then we have the Bollinger Band system with the standard deviation channel. So, you can adapt this to very short term. I'm going to show you how to do that. You set this to 3, set this to 5, set this to 7, and set this to 1.4, about half, 1.4, 1.2. And now you've adapted it to very short term. It's going to be catching these little reversals as it happens. And now understand that this would probably be really good for intraday swing traders catching these moves. Now, understand that. See how quickly we caught this bottom back over here, right off of this low. It stayed positive all the way through this uptrend. Pretty interesting, right? Not only that, but like I said, it works with pretty much everything. You can come down here and you can use the daily, and you can see that we've been in a downtrend. We're currently in an uptrend. This is our gap reversal. So this is the ES. We're not going to get a real sign of the gap reversal, but imagine the market's opened here and rolled into a gap reversal to the upside. That's pretty much what's happening here. And remember, the Gunslinger tools are here for you to use. You can buy them without becoming a expert growth member, or you can get it with an expert growth membership for free. Well, I mean, you would pay for the expert growth membership, but you get the Gunslinger tools part of it. So now let's go back over here to 5 minute, and now let's take a look at the data coming from the next indicator, which is the day trading pressure system right here. Now, the day trading pressure system is designed to teach us to understand price in terms of Fibonacci price theory. So let me come over here, turn the Bollinger Band system off. And what I'm going to do is I'll come in here and I will turn off the lines for the standard high and low. I will turn off the lines for the standard and the unique. And unique bear. Make sure I got the right ones. Unique 50, unique 382, and bull unique. I'll keep the bull unique and the bear unique. And then lastly, I'm going to come down here and get rid of the ultimate high and low. Well, I'll keep those and get rid of the ultimate 50 here. So the reason I'm doing this is this. I want you to start thinking of price as moving within that pool level. Remember I talked to you about that soccer ball? Hypothetically, there's the soccer ball and there's the water level. So in order for the soccer ball to go up, I've got to put upward pressure on it to get it to go up. In order for the soccer ball to go down, I've got to put downward pressure on it to move downward. So now that's kind of what we have right over here. Okay, these are the water levels. The ultimate and unique 382 levels, which are here. This is the ultimate, this is the unique, are the water levels. So when we're above, like back over here, let me go all the way back to where we got a clear rally right here. When we get above the ultimate 382 and unique 382 levels, which are right down in this area, this means that we're getting upward pressure in the market. Means that there's pressure driving the market higher. And what we end up seeing is we end up seeing this pressure indicator go green and blue through this rotation and stay mostly green and blue. While we're in this upward trend, as long as price stays above this ultimate and unique 382 level, you're in an uptrend. It's pretty clear you're in an uptrend. Now, here's where things get a little tricky. When the unique 382 level moves up like it did right here, okay, at this point, you are now going into caution. And let me highlight this by telling you that until we clear this area, you are technically in a caution zone, saying that price could move all the way back down to this lower ultimate 382 level. The way we would get out of it is we would need to see pressure driving the market price higher away from that unique 382 level like we saw right here. The pressure indicators change. You can see they go green and blue and red. Same thing up here, green and red. But as soon as you start to get into this long-term pressure mode here in greens and here with no real breakdown of the ultimate or unique 382 low in that area, you have a pretty good indication that as long as you stay above that unique 382 low, you're going to get an upward trend. Okay, now, same thing happens when we get over here into bearish trending. So here's a good solid downtrend. You can see we move back into consolidation, caution, right back over here. This is caution. And then at this point, we could have gone all the way down to here, which is a risk when you get into this caution mode. But at this point, everything turns bearish. Right here, the ultimate and unique 382 levels have turned bearish. Well, Brad, how do you see that? Because the ultimate and unique 382 levels have moved into this range. No longer do we have this big unique 382 level down here. It's recycled up to here. That means that at this point, breaking down below the last ultimate low, which is this low, would indicate we're in a strong bearish or moderately strong bearish downturn. And as long as we stay below the ultimate and unique 382 levels, we're technically in a downtrend. And here the unique 382 level changes to put us back into that warning mode. This is where you want to pull profits. This is bearish. So this is really, at this point, bearish all the way down. Okay? You getting a feel for it? Each time we establish new lows, Away from the ultimate and unique 382 levels, we're looking at deeper downward price activity. Eventually, we establish the complete ultimate low. We bounce off of that low. The unique 382 level shifts, meaning at this point we're into caution. This is where we try to pull profits, reduce our position sizes. And now, one of two things is going to happen. Okay? Price is either going to attempt to make a new low, or it's going to rally up above and try to take out a new high. Now, in this case, we got a lot of volatility right at the open here. Actually, this is right after the close. Got a lot of rotation. You can see that we rolled up into bullish trending here right at the end of the day. You can see the ultimate and unique 382 levels rolled right down into this area, meaning that we had gone back to bullish mode. We had this washout low, came right back up, went right back into bullish mode, and here we go up to the peak until we end up getting, again, the unique and ultimate 382 levels diverge. This is where you need to be cautious, okay? That's where the unique 382 levels moved up. Price is failing to clear that level. And this level then indicates that we have a potential to move down into this area as an ultimate low. And that gives you the idea that this is your opportunity right here. Swing trade this. And I'll come over here and show them to you. Here we go. Look at this. Even though they're gapping, we're still below. So you swing trade all the way down here. That's a good, solid trend. You're clearly bearish below the ultimate and unique 382 levels, establishing new lower lows as we go. We come back over here. We get a little consolidation right over in this area. Be cautious. Then we get this huge breakdown right here. Huge breakdown. All the way down to these lows. Coming back up to this area, and this is where we get our warning saying, hey, this doesn't look as bearish as we thought. We need to potentially get out, book our profits, and try to weaken or lessen our position in the trade. Now, eventually, we roll over here into a ultimate and unique 382 level that turns bullish. And we get a nice little pop right up here. Then we move into neutral zone, back across here. Let me see how far it goes. Okay, so neutral goes all the way back over to here, meaning we don't need to be trying to take any big trades. You can trade within this range if you want, but don't try to take any big trades. Then we go right back into bearish trending right here. And we move through this bearish trend down to here, staying below the ultimate and unique 382 levels. Okay, let me get rid of that. Then we move back into caution mode right here. Throughout this entire trend, we stay in caution mode. Then, actually, it carries all the way out to here because we are above the ultimate 382 and weakening. Then we get into another breakdown mode, which is today. And here we have this big breakdown mode all the way down here, coming back up to here. And now I'm going to show you the next portion of this, which is going to teach you how and when to pull profits. So now understand that this is now caution, and technically we have moved above the ultimate and unique 382 levels. So we are now looking at potential bullish trending moving out of this move today. Okay, so now, but Brad, okay, I see the bigger picture. I see how Fibonacci price theory works. I see that this is going to potentially help me, especially trying to catch these big trends. How deep is it going to go? Well, again, Fibonacci price theory teaches us that price will move to and establish a new lower low or lower high or higher high at all times. Okay, I think that we need to be aware that price is seeking a low in a very low liquidity mode, but now we need to learn how to pull profits. Okay, so when you come in here and you take a look at this trend and you take a look at this momentum, let me turn volume off. Look at this. Okay, so this starts to turn green. That means we're getting bullish momentum. This turns red. We're getting bearish momentum. Okay, pretty clear to see where the bullish momentum starts to change. Now, at this point, I would start to be concerned that we're going to try to get above any potential major levels. Okay, this is the line, obviously, I've drawn. Get rid of that. So we can go back. We can take a look at previous levels if we have any. Back over here. Again, this works as a support and resistance system. So, you can come back over here and you can see this level here, these ultimate highs and lows, back over here, ultimate low level back over here. We've clearly rolled back into this consolidation range. But again, we have this trending taking place here, right there. And that's giving us a pretty clear indication that we're moving higher. Now, when we add in the Bollinger Band system, the Bollinger Band system rolled into bullish trending as well. But there's more. So not only do you get all these, you get the, right here, the pressure cycles system. And you get the Donchian system. And you get the exhaustion system. And you get the pressure wave. Now, I've started to modify these so you can see them in short term versus long term. I will modify this one to show you how I would adjust this to short term. Basically, I would adjust these down to potentially 3 on the short term RSI, maybe 5, and maybe 14 on the long term. RSI smoothing, maybe 5, 7, and we'll leave that one as 5. Pressure system look back, maybe set this to 5. Min RSI look back, let's set this to 7. Short-term pressure, set this to 3. Set this to 9. ATR balance, let's set this to 14. And now you're getting very short-term cycles, okay? Now you're getting very short-term cycles. In fact, I may have shortened things up too much. Let's come back over here and let's see, short-term balance, 3, 5, min look back. Let's set this back to 21. There we go. That looks a lot better. So now you can see we're getting very short-term cycle rotation. Now we're going to come in here and try to set this up similarly. So we had short-term RSI. I think, what did we have? 5, 7, 14. Donchian, min RSI. Look back. We'll set this to 20. Smooth, we'll set this to 3, 5, or 7. Short Donchian, we'll set this to 7. We'll set this to 14. I don't want caps lock. And long Donchian, we'll set this to 20. Pressure look back, we'll set this to 5. Pressure balance, 3, 5, and ATR balance we'll set to 20. There's my other server. And here we have, again, same type of structure. Honestly, this is short term. I've set these up short term. Now I'm going to come over here and set these up short term. 3, 5, 20. ATR look back trigger. We'll leave that as 2 and maybe make it 3. Look back trigger, exhaustion limit. There we go, rapid fire. Okay, so there's our short-term setup here for triggering. And now we'll set this one up to short-term. The pressure wave indicator, left bars, we'll set it to 4. Right bars 2, short-term balance 3, long-term balance 5. And ATR look back 20. And there you go. So now what I've done, ladies and gentlemen, is I've set this up to short term because I'm trading the ES and I want to see what's going on short term. You can see we've got very clear downward trending here. You've got big, broad downward trending here with a little bit of green right here. Mark this green. And then you've got really solid bearish trending all through here. That's all solid bearish. Move this up out of the way so you can see basically from here up. It's all bearish. Now, we've gone into bullish over here. So we have bullish trending starting to take place over here, building some momentum. We have bullish trending over here, and you can see the pressure indicators starting to show signs to the upside. We're starting to get bullish triggers. We're getting pressure to the upside. Remember, that's that ball being pushed above the water level. As long as the pressure system stays bullish, pushing the ball above the water level, we're going to get bullish price activity. So we would be cautious of any pullback down into this area. And you can see we've gone through a whole series of deep cycle highs and lows, into a high cycle, down into a moderate low, back into a high cycle. So at this point, you can see the divergence coming up, and you can see the pressure to the upside. Okay, and look, we're now off on the ES, on the SPY, we're off 0.75%. ES is off 0.64%. We're climbing back pretty strong. Big, beautiful gap reversal pattern playing out. And we still got a lot of time to run this up. We still got a whole 1, 2, 3 hours, little over 3 hours to run this up. Big, beautiful gap reversal. Loving it. So now, how can you use these? Well, ideally, like I said, I don't want to be involved in you and telling you what to do. In fact, I don't have time for that. You know, I want you to learn to become a better trader. I want you to learn to use these tools. Learn to look for the triggers, like these buy triggers right here. This little sell trigger right here. They're here on the chart. When you come back and you take a look at them, you see sell triggers right here. You get sell triggers right here. Get another sell trigger right here. That's our sell trigger. Then you come down here and you get these exhaustion triggers. These exhaustion triggers tell you that, hey, the market's reaching a fairly solid extreme. Okay, this is where you want to try to book some profits. You know, you can ride this trend out all you want. You can trade it all you want, but you want to try to book some profits. Let me get rid of that buy-sell thing. It bugs me. Trading, buy-sell buttons. Go away. So at this point, you see what's going on. But now let's take a look at, you know, let's go all the way back and look at these triggers. So here's that big sell signal on the 27th, Friday. We come down here. We're looking over here. Look, sell trigger, deep cycle lows, bearish, all the way through, bearish, bearish, all the way through pretty much the end of the day. Okay, it was bearish all day, all morning long. You had these big, beautiful cycle rotations, which means as a trader, you want to sell into these highs when they start to break down. Sell into these highs when they start to break down because you're bearish. You're below the ultimate unique 382 levels. You're clearly moving downward, okay? You want to be selling into these lows, into these highs as they're setting up. So you want to be looking for these highs and selling into downward pressure. Same thing to the upside. So you come back over here. Here's our big upward trend, a moderate upward trend. You want to be trying to buy into these low modes here, like this. That's why these cycle systems are so important. Bullish, bullish, right through here. General upward trending above the zero line. Yeah, we had some deep little pullbacks here, but we're still above the ultimate and unique 382 levels. We're still bullish. And then if we come back over here to this big trend, you can see right here, bullish, 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 little red, bullish, 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 until we start getting over here. And that's when we start getting into the weakening pressure system. See how the pressure system weakens over here? So this is giving you an indication that the pressure system is flatlining. And that's, of course, the end of the day. But you can see here, bullish all day long. Upward cycle. So you're getting deep low, deep low, deep low cycle, deep low, very deep low, deep low, deep low, another deep low, and then finally a deep low here. And this is where we move into the end of the day. Bullish all the way through this cycle. So again, what you're looking at with these deep low patterns, each one of these is a chance to buy into the market moving higher. So very clear indication here. Bullish because we're establishing new highs. We're above the unique and ultimate 382 level. Bullish because the cycle trend systems are above the zero line down here, 0.50 and 0. Okay, so this is really kind of the 50% areas like 0. Staying above this level indicates bullish pressure. Bullish pressure down here. This is the pressure exhaustion system. This is actually the pressure system. And there's moving average lines in here. Let me turn off the Bollinger Band. You can see these little moving average lines over here. See these moving average lines in here? There's green and green. These are the pressure systems. So basically they turn green when the pressure system is strongly bullish, and they will turn red when we start to get some contraction or pullback or bearish trending. Okay, so here, green long-term signal, bearish short-term signal, consolidation. Green long-term and short-term, rally. Green long-term and short-term, rally. Okay, now you also have, like I said, the cycle systems here, the Donchian cycle systems, the exhaustion system. This is the pressure system measuring up and down price pressure. And remember, price rotates. So you want to be able to remember that as we're trending, the pressure system moved lower here, but the cycle system did not move aggressively lower. Neither did the pressure wave indicator change. So again, pullbacks and rotations happen when we get below, like right here, when we get below the ultimate and unique 382 level, that's when we enter into predominant bearish trending. When we get above the ultimate and unique 382 level, like right here, that's where we enter predominant bullish trending. And if you want to be realistic, this is where you make your money. Okay, yeah, you can day trade in here, but you make your money like right over here. We are currently bullish. Let me show you where the ultimate and unique 382 levels are right now. They're right down here. We are clearly above this mode. We are in bullish trending. We do have to be cautious of the fact that, yeah, it could come all the way back down into this area trying to find some support. But as long as we're getting, get rid of those, just choose some lines. As long as we're getting upward pressure and upward trending, we're in a pullback right now, guys. Look at this. We're in a pullback on the ES right now, setting up a cycle low. We would be watching for a recovery rally up out of this. We are now clear. We are in solid bullish trending. And we are cleared for a nice recovery rally. Excuse me. So these tools are, again, part of the Mint.com expert growth services. I want you to use them on the inside the expert growth tools. You come over here to the home page. You go to the right. You either click here, the Mint Pine Script tools, this blue page right here, or you click here for the Gunslinger tools. And here's a training video I did for them. And then here are all of the tools, how to go get them. And basically you need to email me your TradingView ID, and that's how I enable them for you. But what I was trying to do today was to show you how these things work off this ES chart, and to show you how to use them effectively. So we're now bullish. And again, if you look at all these lines, I'll get rid of all these lines. And I want you to remember that I typically run these as side by side. So for example, this is an ES 30 minute. I'll make it a 10 minute. You can see that we have yet to break above the unique and ultimate 382 levels, whereas we have right here. Auto scale, perfect. Auto scale, perfect. And remember, so you can see now, lots of big pressure to the upside, lots of big pressure to the upside, cycle high pattern. We're likely going to roll a little bit here, try to consolidate before we attempt to move a bit higher. This is a very solid deep low. Remember, we're only what? Let me come over here and look. We're only 30 points or so, 0.5% away from being back at where we opened pre-market. Now, granted, we had a little bit of a weakening side trend here, but this is something I could see the markets rallying into the 60-60, 60-80 level here over the next day or two, trading days, possibly attempting to move into new all-time highs, which plays very cleanly with my analysis here. I had indicated back over here, this is 4 hour, that we were going to end up getting a rally up into these peaks, up into the 601, 602 area, maybe a bit higher, 605, 604. So again, playing out very nice. Big gap reversal low, setting up beautifully. But I want you to be aware that, you know, I'm not going to be able to come out and tell you, just like we had this big gap reversal here. So I kind of highlighted this move. This is very clear rejection back to the upside. Depending on where we close today, which will probably be around 593, 594, maybe a little higher, we're going to be back into this flagging pattern. And as I mentioned to you, I kind of think we're going to be rolling, you know, off of this low, back up into this area, consolidating, and then break out. I think we're going to be looking at a move over here around the inauguration up in the 608, 610, maybe new all-time highs. So be aware that this is, partly a training video for the gunslinger tools and partly teaching you how to use the gunslinger tools in combination with my cycle patterns to be able to try to trade effectively. You can see, guys, how clean this breakdown is. It's just very clean down into this area, and then we start to get this rotation upward. This is 10-minute, okay? 5-minute caught the rotation upward a lot quicker. And of course, if I go down to 2-minute, it'll catch it a lot quicker as well. But the purpose of these tools is to help you become a better trader. So now we're back over here. We have our ultimate and unique 382 levels right here. We're consolidating into a bit of a downward cycle trend right here. Downward cycle trend after very strong momentum. We would be looking for a rollover pattern here and a rollover pattern here while we're still in bullish trending, while we still have bullish momentum here, and while we still have bullish trending here. We would be looking for another roll to the upside, because as long as we stay above the ultimate and unique 382 level, dominant trend is bullish. Make sense? Okay. I'm going to leave it there, upload this so everyone can figure it out. I'll put it in the training files as well. Again, guys, trying to help you figure this out and learn how to use these tools more effectively. Again, I don't have the time to sit here and tell you, I'm not going to watch 300 charts and try to, hey, look at this. Hey, look at that. Hey, look at this. My algos do the work. Remember, you have the algos over here, wherever they are, here. 5-minute, there we go. We're getting some algos on the 2-minute, nothing on the 5-minute, nothing on the 15, nothing on the 60s. Wow. They're updating. We're just not getting any data. Let's go check a look here at the IYF, new long trigger, QTech, new long trigger, IYW, long trigger. Everything's pretty much long. This is 5-minute. Long, 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 long. USRT, Nugget, XLRE. Probably a pretty good long trigger. Let's come over and take a look at XLRE. XLRE. And over here, XLRE. Okay, we are still neutral off this 5-minute chart. We are in bullish trending. We are in cycle highs. We are getting bullish triggers here. We are in bullish trending, but we are between the ultimate and unique 382 levels right here. So that means that we would have to stay cautious. You could still take a long here, guys. Just you have to take a smaller position long. Okay? Over here on the 10-minute, we're still below the ultimate and unique 382 levels. Still technically bearish. Still bearish here. A little bit of upward pressure here and nearing a cycle high. I'd be cautious of a bit of a downturn. That's what happens at cycle highs. Unless we continue to push higher, if price stays in an upward trend, this is going to prompt a cycle trend higher, just like we had back over here. Going to be an upward cycle trend here. But at this point, we're looking for a potential breakdown, some kind of a move down into this area and then back up. So same thing kind of applies over here. Got a cycle high here. We would be looking for some sort of a roll and then a move back up. That's what the cycle high tells us. So it's in an uptrend, but it's pretty well exhausted. And now we would be looking for some sort of a roll, maybe within the next 10, 20 minutes. So let's come back over here. GDX has got a nice new long trigger. Haven't looked at gold and silver. I don't see much of a buy trigger there. Let's come back over here and go to GDX. And GDX. Obviously, we're in bullish trending. You can see it here. You can see it here. We're pushing up higher. We are still below the ultimate and unique 382 levels here. Okay, so we do not have any real opportunity yet. We're still below the ultimate and unique 382 levels here. We are still in bearish trending over here on the 10-minute. We're getting a lot of bullish pressure right now, but we haven't cleared that real upside move yet. This does look like it's getting a bit more bullish here. We're getting some strength here. You know, you can trade this. And again, I don't want you to think that you cannot trade these types of reactions here. You can. You're going against the dominant trending. This happens in reversals. You just want to trade a smaller amount. That's how it works. We're still below the ultimate unique 382 level in both these charts. If you're using this 5-minute as a primary trigger, you want to remember you're going against the trend. So you want to trade a smaller amount to the upside. You're going against the trend because it could turn around and roll right back down. Even though you're getting upward trending stuff, this is like the water level. Right now, pressure is down. It's weakening. It's going back to water level, but it's still down. Right now, we got a little bit of upside pressure pushing this back up. We've got upside pressure pushing price back up. We're in a moderate upward trend. We're getting pressure levels that are green. That's what this is telling us, matching these green triggers here. So you're in a bullish trend, a bullish counter trend of a major bearish trend. Make sense? And it looks like it's going to try to break up higher. So this could continue to push a bit higher. Okay, 46 minutes. I'm going to end this. If you have questions, let me know. I'm here to try to help. Okay, guys, talk to you later.